Hello guys and welcome to my next dividend stock review. Today's company will be Realty Income, ticker symbol O. Realty Income Corporation is a real estate investment trust that invests in freestanding single-tenant commercial properties in the United States, Puerto Rico and the United Kingdom. Let's start with its one-year performance. And to nobody's surprise, we can see due to COVID we had a massive decrease in the share value. So from the all-time high of around $82 in February, we are down more than 27%. Now let's have a quick look at Realty Income's website. As you can see here in their portfolio, they have over 6,500 commercial properties, a portfolio occupancy of 98.6%, and they are diversified through 51 different industries. And if you go down here, we see the top 20 tenants, and there are the likes of Walgreens, 7-Eleven, FedEx, and here we can see 3 companies that are struggling at the moment, 2 cinema companies and a fitness company, but with the vaccine coming, I don't think their business are going anywhere. Next up, we can see their portfolio occupancy in 18, 19, and this year. It hasn't changed, and that's with a massive crisis going on, especially for REITs. So I think that's a very positive thing and shows the strength of the company. And the total properties growth, as you can see here, in 2012 they had 3,000 properties, and now 8 years later they have more than double that, which is insane growth. And last but not least, they issued a press release on 3rd of December where they provided an update on the rent collection, and as you can see down here, they are collecting 93.6% of the rent in November, and it's slightly increasing month over month. Now let's have a look at the dividend portion of the company. As you can see here, the dividend scoreboard on Seeking Alpha, a website I would advise you to visit if you're a dividend investor. So we have a dividend yield of 4.71%, which is okay. It's quite low for a REIT, but with a quality company, you normally get a little less of a dividend yield, which I'm fine with. As you can see, we have 24 years of dividend growth with a 4.38 5-year growth rate, which is okay. And of course, the one thing that stands out with Realty Income is that it is a monthly dividend payer. And if you're having a look at the dividend growth, you can see here the financial crisis in 08, 09 and 10. They still kept their dividend, which is a good sign for me that a company can handle crises. But of course, past performance is never a guarantee for future performance, but as you can see, they just keep running the business. Now let's have a look at the Yahoo Finance page of Realty Income. As you can see, the share price at the moment is right around $60 mark. It has a market cap of almost $21 billion, PE ratio of 49.77, and it has a 1-year target of $68. And if you scroll down a little bit, here you can see the growth of the company. The company grows at around 10% each year in revenue, and even more if you look at the earnings. And here you can see what analysts think of the company. And at the moment it is at a 2.2, so it has a buy rating. And if we are looking at the analysis of the stock from the analyst, you can see they have a 5.9% expected sales growth. So the company is expected to grow, and yeah, I wouldn't buy a company that isn't expected to grow. And if you're having then a look at the statistics, you can see here the PE ratio at the moment is around 50, and you can see a year ago when COVID wasn't around, it was at 60. So that indicates to me that at the moment the stock is trading at a big discount. And for the last part of the video, I want to come to a topic that maybe not everyone agrees with, and that is technical analysis. I have been using it over the past year, and I have to say I had great success with it. So basically we are looking here at the 1-year chart of Realty Income. We have here the February highs before COVID. We had the March crash where the share went down to almost $43. And since then we had a big upwards trend. And since June, July, we're forming a pattern that's called a symmetrical triangle. And here you can see the price goes up, down, up, down, up, down, till it reaches a point where the stock has to make a decision. And in a symmetrical triangle, most of the time it ends up in a break to the upside. And you can see here that's the triangle pattern: up, then down, up, down. And at the moment it looks like the next leg could be up, because it's at the downside of the channel. And if you're looking at the current price of the stock, we have a 38% upside to the all-time highs, which in my opinion now is a good time to get into the stock. You could argue that back then the stock was a little bit overvalued, but if you're looking at this range here, I would say that here we have probably had a fair value of the stock, and even here we have an upside of 12% to around 23%. So in my opinion, and according to technical analysis, the stock at the moment is a buy. Another indicator that I want to show you is the relative strength index. That's this graph here. It basically tells you if the index is around 30 or below, that the stock is probably undervalued, and if it's at 70 and above, the stock is probably overvalued. As you can see here in March, the RSI was at 23, which was a clear buy signal. And at the moment, it's right in the middle, it's 47, so it has a lot of upside. So yeah, that was my review of the stock. I just want to disclose that I have a position in Realty Income. I'm adding to it every month, so please do your own research. And yeah, if you like the video, please consider subscribing and liking. And if you want to check out my Twitter, you can follow me right here. And I'm providing content over there as well, so worth a follow, I would say. Thanks, and I see you in the next video.